We're taking a look at the global economic forecast for 2026, and honestly, it's a story that just doesn't add up.
I mean, seriously, when you look at the raw data, it feels like nothing makes sense. The numbers are painting two totally different pictures of the world. It's a real mystery for investors, for observers, for pretty much anyone paying attention.
So on one hand, you've got the IMF, the International Monetary Fund, projecting pretty sluggish global growth. We're talking just 3.1%. Now, to put that in perspective, that's way below the averages we got used to before the pandemic. It's a clear signal that the world economy is, well, slowing down.
But then you look at this number. Goldman Sachs is forecasting the U.S. economy is just going to surge ahead at a really strong 2.8%. That is a massive outperformance compared to everyone else. So, which is it? A sluggish world or a booming America? The two just don't seem to fit.
Okay, but here's the real head-scratcher. This is the piece of the puzzle that has everyone confused. Global inflation is actually expected to tick up again. And yet, the U.S. Federal Reserve is talking about cutting interest rates. I mean, that one move completely flies in the face of old-school economics. It's scrambling all the traditional models. All right, so let's dig into this, because all this confusion points to one single massive theme for 2026, divergence. The world economy isn't just a little fractured. It's fundamentally splitting in two. And this image from JP Morgan, it just nails it. It perfectly captures this central tension we're talking about. You've got this incredible, powerful AI boom. It's like Atlas, basically, holding up the entire world economy. But the world it's holding up is being weighed down by some really serious problems. We're talking sluggish growth, sky-high debt, stubborn inflation, the whole shebang.
And you can really see this split when you look at the raw numbers. The global economy in 2026 is projected to be about $124 trillion. Get this. The United States and China alone are expected to make up 43% of that, all by themselves. That's a staggering concentration of economic power in just two countries.
So that brings us to the biggest economic puzzle of 2026, which is, you guessed it, the United States. It's a genuine anomaly. It is just playing by a completely different set of rules and bucking the global trend.
So why is the U.S. doing so well when everyone else is struggling? Well, it's this really unique cocktail of factors that you just don't see anywhere else. For starters, there's aggressive fiscal stimulus. We're talking massive government spending that's pumping cash right into the economy. Then you have the drag from old tariffs finally starting to fade. And maybe most importantly, this historic AI-driven investment supercycle is just firing on all cylinders.
And this is the number you really need to remember. That 2.8% forecast for U.S. growth from Goldman Sachs. Why is it so important? Because it's way higher than what most other people are expecting. The consensus is just 2.2%. Honestly, this outperformance, it's the whole story.
Look, understanding this American outperformance is absolutely crucial. And if you're finding this breakdown useful and want more explainers that cut right through all the noise, do us a favor and hit that subscribe button. It really helps.
Okay, just a quick but really important reminder here. This is purely for informational purposes. It's an educational overview. It is not investment advice. And as always, remember that investing involves risk. All right, so this huge divergence we're talking about, it's not just about economic growth. It's also happening inside the most powerful financial institutions on the planet, the world's central banks. You know, for years, central banks all around the world basically moved together in lockstep. If one cut interest rates, you could bet the others would probably follow. Well, as this analysis from macroeconomics points out, that era is officially over. They're all going their own way now, and that creates some real uncertainty. It drives big swings in currency values and makes money flow between countries in really unpredictable ways. And this comparison just lays it all out, crystal clear. On one side, you've got the U.S. Fed, which is leaning towards cutting rates. They're even projecting 1 or 2 cuts. Then you flip to the other side of the world, and you've got the Bank of Japan, which is finally hiking rates to break a decades-long cycle of deflation. I mean, you can't get more opposite than that. And it's not just those two. The Fed is looking at a cooling labor market and thinking about easing up. The European Central Bank, they're just holding steady, trying to keep things stable. We already talked about Japan hiking to fight deflation, and China is easing its policies to try and prop up its own growth. The point is, every major economy is now on its own unique path, dealing with its own unique problems.
Now you have to remember all of this economic fragmentation. It's not happening in a vacuum. It's playing out against a backdrop of some seriously intense geopolitical friction. And the scary part?
The two are feeding each other, creating a kind of vicious cycle. In fact, experts at the risk consultancy Control Risks have a name for this whole situation. They call it the normalization trap. And it's a pretty chilling idea. It's this environment where constant crisis, conflict, volatility, just pure chaos, is no longer a surprise. It's the new normal. It's the baseline that everyone, from businesses to governments, now has to plan around. And the risks we're talking about are systemic. They're huge. Top risk analysts are pointing to a potential U.S. political revolution as their number one concern. Think about that. They're also warning about a new rules, no rules world, basically a world where all the old international agreements are just breaking down. And on top of all that, you've got threats from social upheaval and the growing reach of organized crime. So, with this world splitting in two, with all this fragmentation and chaos, how on earth is anyone supposed to navigate 2026?
Well, I'll tell you one thing. The answer isn't some hot stock tip or a magic bullet investment. Nope, the world is just way too complex for that now.
According to JP Morgan Asset Management, the real secret is a total shift in mindset. Their analysis basically says you have to throw out the old playbook. It's obsolete. I love how they put it. Diversification isn't dead, it's just different.
So what's in this new playbook? Well, first you have to stop looking for one single simple global trend. It's just not there anymore. Instead, the idea is to focus on high-quality investments in really powerful long-term themes, the kind of things that can grow no matter what chaos is happening. The entire AI ecosystem is a perfect example, or the global energy transition. It also means realizing that, hey, bonds are actually attractive again, and that foreign markets aren't just playing the same old game. And finally, you have to embrace this idea of multi-dimensional polarization. That's just a fancy way of saying the world's rivalries aren't a simple East versus West anymore. They're happening on all fronts at once, economically, technologically, and militarily.
Look, there's no doubt this new, polarized world is incredibly complex. And if you want to keep digging into the massive forces that are reshaping our future, a great place to start is our next explainer, where we break down how AI is completely revolutionizing the biotech industry. You're not going to want to miss it.